Hey everybody. So I'm Charles from S&P. I've been at S&P for around 11 years. I've been in the DeFi team since its creation last year. I'll explain a bit more what we're doing here at S&P with DeFi and crypto finance. I've been in crypto since 2016, and I've been kind of an evangelist in the company since. What I'm going to discuss here today is risk and the aspect of risk that is needed and how the assessment should be done in DeFi and crypto finance. So when we look at all those companies that they are pretty famous right now, what did they all have in common? When we look at Babel, Voyager, etc., what they really had in common was a lack of risk assessment around them, the lack of risk management, and it led to everything that you're probably aware of in the bear market. Now, I'll bring a lot of context before diving in the meat of the risk assessment and what is really needed and what we are doing. First, I want to show this. So the left side graphic is something all of you probably know. It's DeFi and the size of the total value lock we had in DeFi at the peak. So DeFi grown from 0 to 100 or 200 billion in just 2 years. And if we compare that with the asset under management of big banks, DeFi could have been seen or would have had the size of one of the top 30 banks. So that's pretty big, especially when we see the lack of focus on risk that we had, right? In DeFi, it was all about what is the yield. If I can get 90% yield, I'll just take it. And if I get somebody giving me 20% yield and I don't really know where it's coming from, well, I'll just go ahead and go forward with it. Now, for DeFi to really go forward, what we'll need is the institution to get in, right? It's at least what we believe in. And by the way, everything I'll say here, it's my own opinion, not necessarily the one of S&P. But the institution have been getting in. And when we look at 2018, 2022, it was really, really different, right? We had news every week, every month. BlackRock is investing in Circle. BlackRock is working with Coinbase. Visa is getting in, and on and on and on. Now, for them to really get in, they need several things. That's what we'll be speaking about today. Before that, I want to touch on over-collateralization and the fact that the future is just not over-collateralization. It was a great demonstration of what can be done on-chain, and having Compound are just great. But at the end of the day, to get trillions from institutions, they will not bring trillions to be able to get a 20% loan, right? For mortgages, you would not ask somebody, give me 5 houses so you can get the loan for 1. Institution is the same. So you will need, and we will have credit moving on-chain. We'll have more and more under-collateralized and uncollateralized lending. So how does it work in TradFi? Because there's a lot of things that we don't need to reinvent the wheel. When we look at, for instance, individual, you have a credit score. When we look at companies, you have credit rating agency like S&P Global Ratings, which are providing a third-party assessment on your risk of default. Now, what do we really, really need? So the first one is regulation, which is something that almost every country is looking at. The second one is a trusted, independent third party. And here I'll touch a bit on how it works in TradFi, because we believe that for a while we'll be in a hybrid, right? We are already not full TradFi. We have billions and billions in DeFi, and we will not be full DeFi for at least many, many years. So how can you have risk assessment in both fields, and how does it work in TradFi right now? Well, in TradFi right now, the company that does the risk assessment cannot invest in what it's assessing, which was not necessarily the case in what we've seen DeFi before for those that try to do that kind of thing. But it goes further than that. Employees cannot invest in anything related to the ratings they're doing. That's how it works in TradFi, and that's how we believe will have to happen also in that field. So it means, for instance, an analyst cannot invest in a single stock. I cannot invest in a single stock. When you're in a credit rating agency, you cannot invest even in a fund that is not diversified enough and has like 10% plus in one specific stock. So that's one of the things we'll have to have in DeFi to have quality risk assessment and independent risk assessment. Something else is in a credit rating agency, you have full firewall between the commercial team that will speak with different clients that need a rating and the analytical team, which is doing the actual analysis. It's totally firewall. When there is a conversation, it's chaperone, and that's needed to avoid, well, just the risk to have an influence from commercial to the analytical folks. Now, all that is great, but you also need two other factors which are really hard to get all together. One is you need to understand the risk that you have traditionally in finance. Most of the risks that led to the catastrophic collapse of some of the players I showed before are risks that are known in finance. Now, there are also other risks which are related to DeFi themselves, related to the risk of hacking and the tokenomics, and there are different types of new risk. And it's really hard to get people that really understand both. So what we've been doing on that, so first we started a digitalization of market research lab. So that was in 2021. In 2021, and we'll look at them and some of the application they done, we started to have analysts looking at the field and training themselves at the same time at understanding what is DeFi, having an open mind, which for traditional finance is not always easy. And we'll look at that on the next slide. But then we also invested in Luca, which is a data provider, because we use them for our S&P Dow Jones indices in crypto. That was 2021. In 2022, we created the team I'm part of. We created a chief DeFi officer, and we did the first ever rating of something touching the protocol, which was Compound Prime. So Compound Prime, the idea came from Robert from Compound. He just realized that it would be extremely relevant to have his treasury rated, and that's what we did in 2022. In 2023, we invested in Credora, that some of you might know. I got a slide on them just after that. They are like a credit rating agency on chain, and we just expanded our team from 2 to 5 person. We will continue to extend. So speaking of the research lab, here you have a sample. They did more than that, a sample of all the publications that were done. So they touch really on everything from stablecoin to comparing DeFi and CeFi to look at the crypto valuation and how they could be done. All of those were done by people that are fully TradFi, but that got an interest and trained themselves for now more than 2 years in crypto. And you need people like that to really understand the field and combine their existing knowledge on risk evaluation in TradFi to actually be able to build a new type of risk assessment that we need in DeFi and in crypto finance. Speaking of Credora, just in case you never heard of the name, so Credora was founded in 2019. We invested in them last year with the lead with Coinbase. They are right now monitoring around 3 billion. When we speak with uncollateralized DeFi protocol, I think almost everybody is working with them. They provide real-time risk assessment, and I really invite you to speak with them. I think they're around in SCC. Now, closing on that slide, it's what we're interested in. So, of course, there's a lot of product we're working on right now. We're developing, I cannot share, hopefully maybe next year. But we acknowledge that there is a need to understand the risk of smart contracts themselves, which is not something we would traditionally do. There's a need to understand the risk of stablecoin themselves. So when I speak of stablecoin, I really include them all. So it's bank-issued stablecoin, crypto stablecoin, algorithmic or not. We're really interested in those that are focusing towards the US dollars. So I'm not really including here the wrap Bitcoin, etc., even if it's something that is also interesting to look at in the future. But in the future, there should be visibility on the risk of a stablecoin. So we saw what happened with UST, but the real question is, what is the risk of a DPEG? What is the risk of just getting your money back, right? So some look like money market funds, some look like repo deal, but there's not a lot of visibility on the actual risk from somebody, for retail in general, but even for some institution. Then there is the RWA pool. When we look at some deals that were done, and some that are being created right now, there are pools where, you will invest in some invoice in Colombia, or you will invest putting your USDC in a pool in mortgages in Canada. But that's pretty broad. Right? What is the risk that you have on those specific mortgages? So the only way you can have a view on that is if you have access to see the deal. And in traditional finance, you'll have credit rating agency that are able to see private data because they will not act on the deal, they'll not participate, they'll not share this information, they're regulated. And they can look at the data and give an opinion, independent opinion, on what is the risk of those specific pool of loans, etc. Then there is a lender borrower like Credora has. We're interested also in everything that is proof of reserve and touching proof of reserve. We're also interested in everything touching like the trust anchor like they have in Project Guardian, where institutions are providing an assessment or a proof of security. So that's it. I went through the slide pretty fast, but I just wanted to give a view on several things. First, this need for different type of risk assessment. There's different look at how it could be done in DeFi, but the only way it will be able to be done is when you combine the knowledge of existing risk plus the DeFi risk, and you get to have, with or without regulation, the limitation so that whoever is doing those assessment cannot participate in the investment or in the trade. So that's it. I'll not take question just here, but I'm happy to take any question outside.